Oil, gold, and the US dollar. This is an update by Rich Posson. Critical point, 8:33 a.m. Eastern Time, April 14th. Okay, this is the crude oil weekly chart, and we can see we were looking for a minor long-term bottom. We thought it might occur right there. Instead, they had one last slam down, and it did come down to a minimum downside objective, but then OPEC come in and created this explosion right in there. Somebody thought something was coming up, that it was a little overdone, and we get this gap up. Now that gap will get filled someday, somehow, some way, in my opinion, and I think most futures traders would kind of agree with that. At any rate, interesting that it hesitated the week that they got the news from OPEC cutting production, and they just didn't know what to do. It took them all week, and they still didn't know what to do. And finally, they started out doing the same thing at the start of this week, and then they decided to be a little brave and put the price up some. It's like they were cautious someone was going to come in and sell this and fill the gap. And now they're thinking, must be price is on the low side. There's no reason to fill that gap near term, maybe later, okay? Now, the model's saying it can still rally another 2 weeks maybe into what's called a level one top. That's the most important kind of top during the year, but there's more than one during a year. But it's quite possible that can be the high of the year too. And then it's very important in regards to us timing long term. We're going with the idea we have a minor long-term bottom, meaning the bear market is over, and it may work higher into next year. But we also see reasons that there's much larger trends suggesting it actually ought to work lower into the year 2025. So we got a conflict here of how business is working. They have different long-term opinions, and they apparently feel pretty aggressive about it. So we can get some upside now into next year, but I'm not convinced it's going to be an easy, continuous, persistent bull market, that it can have big setbacks along the way. And then eventually is back down to this 68 to maybe even as low as $60 by 2025. I think this means limited upside for now, for this year and next, when it's probably not going over $100. And I'm not even convinced it's going to 95 this year, even though Goldman Sachs flipped and became a bit more bullish and put it up to 95. Okay, I think overall, as long as it doesn't go over $100, this is not going to be a negative for the stock market and the U.S. economy, that these are decent prices. We're used to it. We're working with it. And I don't think this market is really interested in being all that bullish. I think OPEC's action just helped create a floor and sending a message, hey, you bears were bearish for too long. You put the price too low. We don't like it. We're going to do something about it. You better change your attitude. Well, it looks like they are changing their attitude. Now, it is getting overbought warning. Yes, it can top, but I'm just thinking what we may see is just range trade in here. Even though it's going to zigzag something like this, there might be more upside or downside than we realize. Now, something else to watch out for is trade below 64.36 for this continuous chart. If it trades below it now into the end of the year, that's even additional evidence that it'll be lower by 2025 and could just make it difficult to move up by huge amounts all the way through 2024. Okay, so this is turning into just a short-term trader's market. I don't think there's enough people on board to really create a good bear market long-term or a good, easy bull market long-term. I think this thing's going to trade quite a bit like a range trade. So this is the monthly oil chart. Came down to one of our long-term targets here. And yes, it can do this into 2024, but still be down by 2025. It's just crazy and a bit strange. And what I want to point out is that we want to look back here to around 2011 to 2014. Notice wide swing ranges, sometimes calming down. Notice an overall bullish bias, but yet not. It couldn't go any higher. I think we might be looking at a miniature version of this for 2023, 2024, and then a drop, but it's not implying this kind of a drop, okay? So just that kind of scenario to consider here. Again, I think it's a short-term trader's market. I don't like owning oil for a long term, but I also don't like being a long-term bear. But looking out to 2025, I say no matter how high oil moves, it's probably coming back to 60. Okay, something like that. Okay, for the gold market, this is a weekly continuous chart, and a model saying now in the next 2 weeks, excuse me, it should put in level 2, level 1 tops, but any level 1 top this year can be the long-term, minor long-term LT3, mid-size LT2, and the major LT1, meaning gold can be lower by 2025. It may rebound. It may be lower still by the end of this decade. It just doesn't have to go higher during the rest of this decade. Can't rule out higher later this decade. There's some alternate scenarios, but it's just suggesting that really the bigger move and lengthier move is probably down into 2025, and it's just saying there's not much upside. Now, the problem is it may top now, start down, we think we got it right. It may snap back by summer, early fall for another level 1 and probably the final chance for those tops. I don't know if it's going to record high or not. It looks strong enough. It might. That's okay because it's due for the major long term, but it's possible it doesn't go to a record high. Now, what you have to consider is when it traded down to this level here, okay, shown on this line, that was a signal that it ought to be bearish now into 2025, but it didn't really put in the tops the way we wanted, so it was a warning gold could come back. Well, it's certainly done. It's been very nice, and there's a variety of reasons for this strength, but it's looking like some of these reasons are getting a little irrational, and market's already getting overvalued, and I just don't trust the bullish stance in gold. I think it ought to work lower. This is the monthly chart for gold. And yes, we're still allowing more upside this year, but, it can top at any moment. And we just think it ought to come all the way back down to near this level going into 2025. Ideally, it'll go lower than the low in September 2022. And we're seeing this for a lot of commodities. They can be weaker by 2025, but some of them can have some big up moves yet this year or next. But they ought to be back down by 2025. They may snap back up later in the decade, but they can still be back down by the end of the decade for a recession for the economy and bear market for the stock market, and we can have a bear market in commodities and real estate. Everything can be down. And this is the weekly chart of the US dollar index. We think it's in a bear market at least into, say, late May on into June, July. Maybe it can stay down longer than that. We think by 2024 the dollar will be back up some, but we're not seeing a lot of upside for the dollar for a few years yet. But at the same time, we question how much downside. We're seeing news that some countries are switching away from the US dollar. That scared some people. I think that's a very small component. I think it's something that may work for the next 100 years so that eventually the US dollar is not so popular. But right today, the dollar is used so much around the world that I think people are just creating an irrational bearish trade in the dollar that, people aren't going to use the US dollar. It's a very long, drawn-out process with short-term periods that's going to get people excited, and I think they're just scaring people. I think it may very well be a bunch of nonsense when it comes to the overall global use of the dollar. That doesn't mean individual countries can't do something significant, however. Any rate, and we've been bearish the dollar from this high anyways, and this has been working fantastic for us, but this little black line is warning they can be done selling here this week or next and take it back up for an L2, but we think it's only going to be a little correction or retracement and lower still into a level 1, but we really don't know how much lower it can go because this indicator's warning they've kind of overdone it. It's a little too fast here. Now, granted, the fundamentals will play a huge role in this. Is it too low priced? And already people are saying the dollar is really out of whack with the euro. I mean, you can buy things much cheaper in Europe. And, ever since I've been a child, people were saying, Europe, they're too socialistic. Everything's too expensive. My gosh, it's the pro-capitalist countries these days that have very high cost of living, very high cost for retirement people. It's just bizarre. And a lot of these socialistic countries are really not socialist in my opinion, but they're doing better right now. Well, some of this could be a currency play, okay? Could be a currency play. Any rate, That's our forecast. Is, yeah, the dollar can bounce a little bit. We don't think it's going to bother the stock market that much, but we are looking for a setback in the stock market in May. Therefore, we're looking for some of these fluctuations of these outside things that can impact the market or at least correlate positively or negative with what's going on in that particular market. At any rate, dollar index, yes, we're looking for a rebound, and we think it comes back down, however, in the next couple of months, and then we will reevaluate. Okay, that's your update for crude oil and the dollar and gold. And if you're not a subscriber, go to criticalpointpod.com. You'll find information about myself and the model, sometimes some blogging, sometimes, and then you'll find a link to the pod host for the podcast, where some are free, but mostly are locked up, and you'll find links to sign up. Get on board. We've got a roadmap of where we're going for a few commodities, the economy, interest rates, the stock market for this decade. This business cycle works very well. It's valid. It's valuable. It's very useful. And I've used it for decades, and I've done very well for myself. And I think you'll find you can plug it in with your other analysis or newsletters or advisors or whatever. And let's get on board with this journey for this decade and see if we can manage risk and make a buck. All right, thank you very much. And if you're not a subscriber, become one. Give us a trial here. I think in a few months you'll say, yep, let's stay on board and see where we're going for this decade. Let's see where we're going into next year for the economy and all these markets. Past results are not necessarily indicative of future results. Thank you.